There's Zions. We show it to you up near 3% because it does report after the bell today. Remember last week? The stock lost $1 billion in market cap on Thursday alone. That's after they disclosed $60 million in loans that they said were unlikely to be repaid. As regional banks find themselves, as I said before, in the eye of this storm around credit. Wells Fargo says it's a buying opportunity for this group. Joe has at least a dozen of these names, I feel like, in front of me. I'm not going to read them all off. I usually do, but I'll save time and I won't. But what do you think here?
We have 7 mid-cap regionals and we have 2 super regionals. I don't know if I would buy them here. I think I would pause, just hear what you're going to hear from Zions, hear what you're going to hear. I believe it's tomorrow or Wednesday on Western Alliance. I apologize for not knowing, but I know it is this week. Understand these are small-cap regional banks. What I have ownership of are more mid-cap regional banks, and a lot of those banks have already reported, and they've already confirmed and given you the confidence that they do not have the challenges ahead of them. So I don't think this is a story that's going away. I think we carry with us into 2026. I think, yes, in fact, there are some bad loans out there. We're going to hear more details about that in the coming months, but I don't think you could universally assign that the regional banks themselves or a sale or the regional banks themselves are going to deteriorate to the regard that we believed last week.
Well, let's see what Zions delivers and then what they say. It's just a good time to hear from the company, which we will, as I said, coming up. There's a stock up near 3%. I mentioned Josh Brown's best stocks in the market. It plays into this because it is the financials as a group. Now, I teased the fact that the stock he likes the best, the favorite chart of the bunch, as he eloquently put it to our producers earlier today, is AMEX, which you don't own, which did get its target raised today, which is coming off pretty good earnings of last week. Tell us more. Why did it land? Why did it land on your list?
You don't have to know anything about. You don't have to know anything about technical analysis at all to understand what's taking place here. But if you're interested in the specifics, this is a name that has obeyed its 50-day in the recent uptrend, but in the long-term uptrend, it's obeyed its 200. Even at the worst moment this April, this stock was not down for long. You've got to look at this. You've got a golden cross here over the summer, 50-day crossing over the 200. Jenny, cover your ears. I know you hate this stuff. But what that means is that the buyers have taken control of the stock, and they are coming in faster and faster on the dips. So it's not voodoo, it's human behavior. And why are they doing that? American Express is, in addition to being the primary financial to capitalize on the fact that 50% of the spending in this economy in the United States is coming from the top 10% of households. Every one of them has an Amex Platinum card in their wallet. It's also a bigger story about capital return, and I'm going to get to that in 1 second. I would just point out it's tough to buy stocks at all-time highs. Nobody wants to do that, and I don't aim to do that specifically. But this is a fresh breakout to new highs. There are now no natural sellers left here. I think it can march up to 400 over time. And the reason I don't personally own it is because I'm already very exposed. American Express is the second largest holding at Berkshire Hathaway. It makes up 16% of Berkshire's portfolio. They have 152 million shares. So they have $50 billion worth of Amex on their books. And I am a long-term Berkshire Hathaway shareholder, so I don't need to double own Amex. That's why I'm not personally in this. How did Berkshire Hathaway end up owning 22% of American Express? They didn't buy it. American Express has one of the most aggressive long-term share buyback plans of any company in the S&P 500. From 2005 to 2025, they have basically cut the float in half, from 1.2 billion shares to under 700 million shares. So for me, this is a really great setup for a trade. I'm along for the ride via Berkshire, but this is the best chart in all of the financial services stocks on my best stocks in the market list right now.
Joe likes to buy stocks at highs.
I do.
If you would have read your Long Island homies book, buy stocks or buy high and sell higher. You know that.
I have the first copy printed.
Of course you do. You know what's
You
interesting?
got to look after your guy from the 516.
You know what's interesting about AMEX is in July of 23, we began to build positions in a lot of the regional banks that you talked about, and we also built positions in financials. Very quickly moved to an overweight in the financial sector. With AMEX, the reason that we bought it was the balance sheet. We didn't buy it based on momentum. We bought it at 168. It's 348 now. Yeah, momentum is present now, but we bought it because of the return on equity, the debt to equity, and the way in the environment of 2023 they were managing the business relative to the rest of the financial sector, which, if you remember back at that time, really no one wanted to own financials, certainly not regional banks.
Jenny owns Amex, right?
Yeah,
Quick.
and this is when I really like things, when actually the fundamental picture matches up with the technical picture. And what you have with Amex is you've got a 20 times multiple, which isn't that cheap, but it's cheaper than the market, and you've got 13% earnings growth ahead, and you have a great story, and you have the high-end consumer. So in this one, I'm all for it, but I'd rather own something at 20 times with 13% earnings growth than 30 times with 9%.
All right. Well, you can join Josh as he reveals his best stocks for the 2026 year at the next CNBC Pro Live event. It's January 15th, right here at the New York Stock Exchange.